Good evening, everyone. Welcome to the channel. Today I am going to talk about Beke-W interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. And KE Holdings Inc. provides a wide range of businesses and services through its integrated online and offline platform for housing transactions and services in China. The company offers existing home transaction services, new home transaction services, home renovation and furnishing, home rental services, emerging and other services, including plus Beke, an integrated online and offline platform for housing transactions and services, plus Lianjia, a real estate brokerage branded store plus agent cooperation network, an operating system that fosters reciprocity among service providers, plus Dayu brand, connected brokerage stores, rental property management and operation services, contract, secure payment, escrow, and other services. The significant increase in Beke-W stock price over the past year can be attributed to several key factors. Firstly, the company's impressive Q4 2024 earnings beat, with an EPS of $0.31 against a consensus of $0.22, provided a substantial boost to investor confidence. Additionally, the expanded share buyback program and positive analyst upgrades and ratings have also contributed to the stock price increase. The strong first half 2025 financial results, which saw a year-on-year net revenue increase of 24.1% and a total transaction volume increase of 17.3%, further solidified investor confidence in the company's performance. Furthermore, broader news regarding stimulus measures in the Chinese property market has also positively impacted Beke-W stock price. Overall, these factors have combined to drive the stock price up by over 50% from its 52-week low to its 52-week high within the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The company's revenue has grown primarily due to a significant increase in gross transaction value, GTV, by 17.3%, driven by the GTV of new home transactions, which rose by 26%. The net revenues from existing home transaction services and home rental services also contributed to the growth, with an 85% year-over-year increase. Additionally, the company's precise product positioning and design through Sitwo Million in Beke-W, as well as its integrated online-offline marketing services, have been key drivers of revenue growth. Revenue decline drivers. On the other hand, the company's revenue has declined due to unfavorable local market conditions, which led to a decrease in new home transaction services by 19% and existing home transaction services by 21%. The emerging and other services segment also saw a decline of 50%, while the gross profit margin decreased. Furthermore, share-based compensation expenses, goodwill impairment loss, and disposal of assets have also contributed to the revenue decline. Net income and profit margins. A decline in performance. The financial performance of a company has experienced a decline in recent years. Net income decreased by 7-13.3% from 2024 to 2025, indicating a significant drop in earnings. This decrease is consistent across various pages, highlighting the severity of the issue. Profit margins have also taken a hit, with gross margin decreasing from 26.8% in 2024 to 21.3% in 2025. Operating profit margin and adjusted operating margin have also seen substantial declines, dropping by 35% and 41%, respectively. These decreases suggest that the company's ability to generate profits has been compromised. The reasons behind these declines are not explicitly stated, but the inconsistency in financial data across pages raises concerns about the accuracy of the information provided. Nevertheless, it is clear that the company's financial performance has deteriorated significantly over the past year. The company's financial performance reveals a concerning trend. Despite various pages confirming the same information, it is clear that the company is generating negative operating cash flow. This is evident from both RMB and USD values on different pages, including page 13, page 27, page 28, and page 83. The consistent negative values indicate a significant issue with the company's ability to generate positive cash flow from its operations. The company's debt level has experienced mixed changes over the past year. While total debt decreased by RMB 684,735 on page 14, short-term and long-term borrowings increased by a total of RMB 257,301 on page 16. However, a significant reduction in debt was observed on page 28, with a decrease of 10,789,267 in purchases of time deposits and held-to-maturity debt investments. On the other hand, interest expenses have shown a notable decline, decreasing by 46% from 2024 to 2025. This suggests that the company has managed to reduce its financial burden through effective debt management and cost-cutting measures. Management's outlook and strategy overview. According to management statements, the company is focused on improving operating leverage by adjusting its strategy to offset decreased gross profit margins. They also have sufficient cash to meet current working capital requirements, but may need additional funding in the future due to changing business conditions. To achieve growth, the company will fund future capital expenditures with existing cash and proceeds from offshore offerings. Additionally, management is committed to attracting and retaining top talent through competitive compensation packages and a stable core management team. Overall, the company's strategy appears to be centered around optimizing operations, managing cash flow, and investing in its people to drive growth. There have been no significant transactions involving the acquisition of new businesses or assets by the company. Similarly, there have been no notable sales or disposals of existing business units or assets through divestitures. The company's financial structure remains unchanged from previous periods. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. Notably, the company paid out significant dividends in April 2024, $398.8 million, and 2025, $401.6 million, indicating a commitment to rewarding investors. Additionally, the company has also been actively buying back shares, with notable transactions in 2024 and 2025, totaling 2,701,210 RMB and 2,830,382 RMB respectively. That concludes the financial summary for Beke-W. Feel free to comment below, and I will be happy to answer them when possible.